Money was never designed to be simple. It was designed to be understood by those who look deeper. Most people work for money their entire lives. He stands before the book without ever learning the rules that control it. Its pages open, symbols rise, yet the mystery remains. They believe income equals wealth, but high earnings can be fragile, like glass. True wealth is built on a solid foundation. They believe saving equals security. They believe hard work guarantees freedom. The chain snaps and falls in slow motion. The character remains motionless, because money follows structure, not effort. There are hidden rules operating beneath your paycheck. Most people work for money their entire lives. Beneath your bank account, beneath your financial stress. And if you don't understand them, you can earn more every year. Your income grows steadily, your salary climbs year after year, and still stay financially average. Today, we expose the rules nobody explained. In finance, empty slogans like hustle harder dissolve into data-driven strategy. We focus on analysis, not empty phrases. Surface-level advice won't help you navigate these markets. You need deeper insights. Let me reveal the golden structures beneath. The real operating system of money. And once you see it, the patterns become clear, guiding every decision with precision. You won't look at your finances the same way again. Most financial stagnation is not caused by low income. It's caused by low positioning. The average person is trained to accept this endless, repetitive cycle. Earn. Your income is rising steadily. Watch your earnings grow. Success is yours. In the world of finance, the cycle of income and spending is constant and balanced, a cycle that perpetuates growth. They measure progress by salary increases. They measure success by lifestyle upgrades. They measure stability by the number inside their checking account. But money does not reward motion. It rewards leverage. By pressing down, you lift your assets higher. This is the power of financial leverage. It rewards systems. It rewards patience inside structure. You can earn $50,000 a year and build wealth. You can earn $150,000 a year and remain financially fragile. The difference is not intelligence. It's how you apply it. It is not luck. It is understanding the invisible mechanics behind money. Because here is the uncomfortable truth. If your cash is sitting still, it's losing value. Let it work for you. Even as you watch, inflation silently erodes your wealth. Vigilance is the only defense against this invisible force. If your debt is unmanaged, it will tighten its grip and grow uncontrollably. It is multiplying. If your income rises without a system, your spending will become chaotic and uncontrolled. Your lifestyle will consume it. And the most dangerous illusion of all? Feeling fine. Most people are not financially secure. They are financially untested. One unexpected expense. One medical bill. Rising costs float ominously, a silent burden. One job disruption. Employment becomes unstable. Income fractures. And the illusion collapses. So let's dismantle the illusions. Let's uncover the rules. The first hidden rule of money is this. Cash is not neutral. Money sitting idle is losing power every year due to inflation. Even modest annual inflation of 2 to 3% quietly erodes purchasing power over a decade that compounds into a meaningful loss. Most checking accounts pay almost nothing in interest. Translation: complex financial data transformed into simple, actionable insights. Your money is working, just not for you. Banks lend it. The vault opens, releasing a flow of capital towards loan contracts.
Institutions invest it.
Markets multiply it. You hold it. The stack of cash is secure as growth opportunities pass by toward the markets. Your position remains strong. The money stack slowly shrinks as inflation waves ripple through it. The character's serious expression reflects the economic reality. This is not a conspiracy. It's the power of strategy and insight. This is structure, a solid foundation for growth. It builds upon itself, creating opportunities. In the world of finance, one golden rule guides every decision. The numbers reveal the path to prosperity. Liquidity is for stability. Capital is for growth. Keep operational cash for expenses. Position the assets to maximize returns. Watch the indicators rise, signaling growth. This is the path to financial success. Because money that does not compound. The coin stack decays, crumbling into golden dust that drifts away. A metaphor for the fragile nature of wealth. Now let's talk about compounding. Compound growth is not dramatic in the beginning. It starts with small, incremental gains that build steadily over time. It is quiet. The gains are unimpressive, a small stack beside a flat chart, modest returns at best. The gains are unimpressive, a small stack beside a flat chart, modest returns at best. The markets are calm today, a slow, steady upward trend. The character sits quietly, observing the reliable growth.
That is why most people abandon it too early.
Compounding is mathematical acceleration. Returns generate returns. Observe how each layer spawns more growth, a cycle of endless returns. Growth builds on growth. Time magnifies discipline. Start small. Every great portfolio begins with a single strategic step. Each coin represents a step toward financial security. Building wealth is a steady, focused process. Let time do what effort alone cannot. But here's the rule nobody emphasizes strongly enough. Compounding works both ways. One path leads to growth, the other to a spiral of debt. If you invest at 8% annually, your capital can double roughly every 9 years. If you carry 20% high-interest debt, it doubles in about 3 to 4 years. One system builds. The other extracts. Smart money eliminates high-interest debt first because no investment reliably outpaces uncontrolled compounding debt. Institutional behavior protects the base first. This is market structure thinking. Observe the liquidity zones and support layers forming. This reveals the true market structure. Protect capital.
Then deploy capital.
Now let's address another silent rule, taxation psychology. Many people fear earning more because they misunderstand progressive tax systems. Only the portion of income within each higher bracket is taxed more. Income is taxed in layers. Each bracket applies to a specific portion of your income. This progressive system ensures higher rates only affect income above each threshold. Only the portion that enters a higher bracket is taxed at that higher rate. Earning more never results in taking home less. Yet this myth persists. Why? Because financial literacy is not systematically taught. And misunderstanding discourages ambition. Smart earners use tax-advantaged accounts to optimize positioning. Retirement accounts, a secure vault for your future, steadily growing with every contribution. Pre-tax contributions go into your account before taxes are applied. This lowers your taxable income, saving you money. Strategic deferrals shift tax payments forward, preserving capital and enhancing liquidity for future opportunities. Embracing responsibility means addressing taxes and planning with equal diligence. But to play within structure intelligently. Money rewards optimization. Coins travel through the most efficient golden pathways to growth nodes. Your credit score is not just a number. It reflects your entire financial reliability. This is your financial reputation index, built from symbols of trust and credit, a measure of your financial integrity and reliability. It determines how expensive your future becomes. The other, a smooth golden path. A lower score can mean thousands in additional interest over time. These indicators represent your path to financial mastery. Each one illuminates as you progress. On-time payments. Low utilization displays a small percentage, while the unused capacity glows brightly, representing your available credit. Longevity. A stable history of glowing financial milestones, extending forward into a secure future. Controlled inquiries. Selective access, with spacing that ensures precision. A premium approach to financial intelligence. There is nothing mysterious here. This financial diagram is simple and clear. Its transparent structure reveals the data. Consistency builds reputation. And reputation lowers cost of capital. Now let's separate good debt from destructive debt.
Debt is not evil. Misused debt is.
Leverage used to acquire appreciating or income-producing assets can build wealth over time. High-interest consumer debt that funds depreciating consumption drains wealth. The decision symbol illuminates, revealing two clear paths for financial evaluation. Contemplation is key to unlocking the optimal choice. Does this obligation increase future cash flow?
Or reduce it?
If it reduces future flexibility without producing value, it leads to inevitable constraints and diminishing returns. It is extraction disguised as convenience. The emergency buffer, a protective shield that secures your financial future. It expands to safeguard your assets when you need it most.
Most financial crises are not dramatic.
They are ordinary disruptions, small, everyday expenses that can quietly erode your financial foundation. Car repairs can be a significant and unexpected expense. The costs of tools and parts add up quickly.
Medical bills. The costs just keep rising. Plan ahead for the unexpected.
Temporary income gaps can occur, but the chart shows a quick recovery. This resilience is key to long-term financial stability. Without liquidity, the financial reservoir runs dry. The channels are empty, the flow has ceased. These become high-interest debt events. An emergency fund is not optional.
It is a volatility shield. Market volatility waves crash harmlessly against it, protecting your investments. 3 to 6 months of essential expenses is not excessive.
It is strategic insulation.
This prevents small shocks from becoming long-term damage.
Now let's address opportunity cost. Spending offers immediate rewards, but investing secures future growth. Every dollar has two potential futures. The one you see on the receipt. Date, October 10th, 2023. Description. And the one it could have created.
Small recurring expenses feel harmless. Individually, they seem insignificant, but they add up over time.
But money invested consistently over decades becomes significant. This is not about deprivation, it's about balance. Enjoy your lifestyle while investing for the future. Observe the awakening of awareness, guiding you through the financial decision map. Let this symbol illuminate the path to informed choices.
Spending should be intentional. Controlled purchases align with your financial goals.
Investing should be automated. Retail behavior reacts to emotion. As the market flashes, traders react with chaos, but the professional observes, calm and detached.
Smart positioning relies on systems. Now investing. The potential for growth is clear. Seize the opportunity.
The data consistently shows that long-term broad market participation through low-cost diversified index exposure outperforms most active strategies over time.
This is not exciting. The data shows steady and effective growth, confirming our strategy is working. The market rewards patience more than prediction.
Capture employer matches. Your contributions grow instantly as matching funds appear. Watch your retirement savings multiply. Use tax-advantaged accounts to route your investments efficiently. This allows your money to grow faster and more securely. Automate contributions. The system deposits coins regularly into your accounts. Your wealth grows effortlessly. Reduce fees. Now your investments can grow. Complexity does not equal sophistication.
Simplicity executed consistently wins.
Now, lifestyle inflation. Income rises. Growth is steady and strong. Success is assured. Spending adjusts.
Savings remain unchanged. While income and spending both increase, your savings stay flat.
This is the silent trap of financial growth. The moment your income increases, your baseline expectations adjust. As the market rises, so do your lifestyle indicators.
Your new, bigger apartment, a symbol of your growing success. Your lifestyle is ascending to new heights.
Upgraded consumption unlocks a world of premium possibilities. Experience the glow of financial empowerment. Luxury car, private jet, luxury yacht, luxury villa. Collectively destructive, lifestyle icons merge, forming a financial vortex draining coins downward. The hidden rule?
Raises should increase asset accumulation before they increase lifestyle. Let your income grow your wealth first.
Automate a percentage of every income increase immediately. The system instantly redirects it into your investment account. If you never see it, the automated investment pipeline moves coins silently behind this translucent interface. You never miss it. Our automated investment system runs continuously, ensuring your lifestyle remains stable and unaffected. Finally, protection. Insurance is not a wealth builder. It protects, but doesn't generate growth. A wealth defender, protecting rising assets with an impenetrable shield, fortifying financial growth against any threat.
Health protection is integrated into our financial shield, ensuring your investments are secure. One uncovered event can erase years of disciplined growth. Protection ensures that when volatility strikes, our shield slows its advance and keeps you safe. Your financial trajectory remains intact. This is structural thinking. Building a strong foundation with layered pillars supports sustainable asset growth. Now we shift from defense to expansion. Wealth is not built through intensity.
It is built through duration. Small capital can grow if positioned correctly. On a strategic grid, it expands into a rising asset structure.
The $1,000 start is not insignificant.
Every great fortune starts with a single seed. Nurture it and watch your prosperity grow. Reinvesting profits creates a powerful loop of growth. This drives your assets to expand exponentially. Smart positioning for small accounts includes connecting to a strategic financial system. This unlocks growth potential through our strategic system. Risk management. Adjusting exposure to safe levels stabilizes growth. A controlled approach ensures steady, reliable returns. Position sizing is key to managing risk. Distribute your capital proportionally across trades. Adjust the sliders to set your size for each position. Avoiding over-leverage. Consistent skill development is the foundation of success in finance. Study the markets, embrace the data, and grow your expertise.
Traders fail not because markets are impossible. They fail because they react emotionally, not logically. They fail because they treat markets emotionally.
Institutional money operates with precision and strategy. A structured system where every module activates in perfect sequence. Defined risk. First, set clear financial goals. Then, analyze your data. Next, develop your strategy. Finally, implement and monitor. Every investment journey begins with a defined time horizon. Short-term for quick gains, medium for balanced growth, and long-term for compounding wealth. Retail money often operates in volatile markets, navigating erratic trades and flashing signals with serious intent. An impulse trade triggers a sudden market spike. Fear grips the market as the numbers fall. Traders retreat and confidence crumbles. The market surges and his confidence soars to new heights. The peak of success fueled by bold conviction.
Revenge trading. After a loss, the trader desperately presses buttons, trying to win back everything. Skill stacking is the modern advantage.
Institutional money operates with precision and strategy. A structured system where every module activates in perfect sequence. Market structure understanding begins with support and resistance zones. Liquidity areas highlight where the market can move. The emotional brain fades, while the risk control system stabilizes, finding balance. Technology leverage transforms raw data into actionable insights, empowering decisive financial mastery. The AI brain scans the charts, analyzing trends and generating precise trading signals. Automation systems route digital assets through strategic financial pathways with precision and efficiency.
The future of trading and wealth building will not reward speed alone.
In the world of finance, it is adaptability that is rewarded. The flexible structure adapts, sustaining its upward growth. AI will increase market efficiency. The AI engine activates, reorganizing financial pathways for optimal connectivity.
Data access will become universal.
Execution tools will improve. The edge will shift from information to discipline. Those who build systems now are early. Those who rely on emotion will be filtered out. Growing capital intelligently means strategic connections and systems that adapt and grow. Preserving downside. A protective barrier stops downward loss arrows from reaching your assets. Letting upside compound. Watch the growth spiral rise steadily. Success through compounding. Avoiding catastrophic loss. Because survival is the first victory. You cannot compound from zero. Without initial capital, growth spirals fade before they begin.
Effort is common. What sets you apart is how you apply it.
In a volatile market, weak structures fade away. Only the strong framework remains, glowing with potential. Income is visible. The numbers are growing. Financial success is clear. Beneath the visible income bars, subtle mechanisms power the financial systems. Observe the hidden forces that drive success. The market charts flash erratically, and the trader reacts with dramatic intensity, conserving a calm. Systems respond. Automated protocols stabilizing market indicators. Structured responses executing. Excitement spends. Discipline invests. Consistent contributions build lasting wealth. Let your strategy drive growth. Impulse trades trigger a sudden market spike. Rapid executions drive volatility higher. The chart pulses with each press.
Strategy allocates. The allocation flows through secure channels, into diversified assets. Fear freezes. The trader is paralyzed, unable to act as the market moves without them.
Knowledge adjusts.
Motivation fades. As the flame dims, so too does the drive to complete the tasks at hand.
Automation compounds. The automated system repeatedly deposits coins into the compounding spiral. That grows steadily upward. Automation compounds. An automated system repeatedly deposits coins into a compounding spiral that grows steadily upward. It is built in cycles. Saving leads to investing, which compounds and reinvests, creating a cycle of growth.
Security is not a feeling. True protection comes from structured, rational safeguards.
The system is now fully operational, connecting assets, automation, protection, and growth.
This is not gambling. This is structured financial analysis, data-driven and reliable.
Blocking the position, coins are sliding into optimized slots, growth indicators are active. Financial grid is now optimized for maximum efficiency and growth.
This is not about getting rich quickly. It's about the steady, long-term growth that builds real wealth.
It is about building systems that make growth inevitable. Locked in modest inputs, the system channels steady growth. A powerful engine transforms potential into prosperity. Here, the strategy map illuminates, revealing the clearest pathways to optimal returns. The path to financial success is steady and upward, regardless of market timing. With disciplined investing, your wealth continues to grow over time.
Build a strong foundation and watch your wealth rise. A secure structure for sustainable financial growth. If you are ready to stop reacting to money
And start understanding it. If you are ready to stop chasing outcomes,
controlling inputs to direct coins into strategic growth channels, optimizing for maximum return,
then you are no longer operating blindly. Initiating strategic sequence, aligning market data for optimal positioning. Grid is live, patterns converge, execute the plan.
Welcome to Finance Hustle.